Okay, this is a bit of a review. Some of it should be a review here, but just so we're on the same page, since this is a chapter about fixed assets, I wanted to go through some journalizing of fixed assets, kind of the major things that happen, and what balances and accounts that matter, and that kind of thing. So let's use our double declining balance method that we just got done doing in the last video. So we're going to use this asset, this initial cost of 24,000, expected useful life of 5 years. We're going to use that fixed asset. So when I buy the fixed asset in the first place, let's assume that I buy it for cash. Say it's a piece of equipment. I debit equipment for 24,000, and I would credit cash for 24,000. Assuming I bought it for cash, that would be what the journal entry would look like. Simple enough, straightforward enough. Now, when I actually get depreciation, this is actually back from chapter 4. Well, I told you at that point weren't going to calculate it until a future chapter. Now we're at that chapter. The journal entry itself is still the same, and it's always the same for depreciation, and that is a debit to depreciation expense and a credit to accumulated depreciation. So if this is year 1, this double declining balance, then the amount that I would depreciate it is this 9,600. So I'm debiting for 9,600 for depreciation expense, credit 9,600 for accumulated depreciation. Year 2, I'm going to do the same entry, but it's going to be for 5,760. So I need to retype this just like that. So 5,760 and 5,760. We'll do year 3 as well. But it is the same entry, just a different dollar amount because we're using double declining balance. Remember, if this were a straight line, these would all be the same unless we had a partial year. So this one is 3456. Okay. Now I want to show you some interesting things, just things you need to know for later in this chapter. After year 3, can you find the book value of this asset? And the answer is you should be able to. Book value, remember, is the initial cost minus accumulated depreciation. Accumulated depreciation is a contra asset, so it continues and goes, it accumulates over time. Whereas my depreciation expense, that was for each individual year, and those would go away through our closing process. But the accumulated depreciation stays on our books until I get rid of the asset itself. So initial cost of this asset is 24,000. The accumulated depreciation, I can just add my accumulated depreciation. So as of year 3, my book value would be 5184. If you notice, that does match here with the beginning of the year, or end of the year for year 3, beginning of the year for year 4 would be, as it should be. So that's journalizing that. And I wanted to make sure we understood this because the next part of this chapter, we're going to talk about revising depreciation. And then after that, we're going to talk about disposal. Both of those require you to know and understand how we journalize the entry in the first place.